Welcome to Dental Unscripted, where Mike Dinzio and Paula Quinn break down the practice ownership journey, one episode at a time. Starting up, buying, and running a successful dental practice.
All right. Welcome back to another episode of Dental Unscripted. My name is Michael Dinzio. We also have our other co-host star of the show, Miss Paula Quinn. And today we're talking about all things dental leases. A super fun topic. However, it comes up all the time. Somehow I get dragged into the conversation, yet there's a real estate person and an attorney and all these people, and I get asked some of the most basic questions of a lease, and I don't want to answer them. So I figured let's have a podcast and bring in a professional that really knows this stuff like it's their everyday job. So welcome to the show, Dan Gleissner. Dan's been on the program before. Welcome back, my friend.
Thank you for having me. I'm not sure I want to answer those questions either, though.
Well, it's your job, so you're going to have to. No, man, welcome back. We had a great episode the last time you were on, and I think just like dental leases, they're very, very important, and it gets overlooked in how important they are, and it's super important to have the right people look at these things. And, they're complex situations, and so I think for any doctor that's buying or starting or even owns a practice and their lease is coming due, all this stuff is really, really important. And so thank you for being on the show and contributing. A little housekeeping: if you're watching this on Startup Unscripted or Dental Acquisition Unscripted, we're merging to one brand that's easy and simple called Dental Unscripted, and the goal is to have episodes that don't just talk about start or buy, but also how to run your practice and tips and tricks. Paul and I just did one this morning about hygiene. If you caught that, how to boost your hygiene department. We've talked about culture in a practice. We talked about some leadership stuff. So all things that you guys need to be thinking about if you are buying or starting, but also a lot of you own now. We love to have new content. So Dental Unscripted is the answer there. Okay, without further ado, we're 3 minutes in, and I know if I don't hit it quick, we're going to lose you and you'll turn it off on your way to work or home. So without further ado, Dan, why don't you give us a little bit about your new company? Congratulations on launching your new agency. Why don't you tell us a little bit about like that, and then we'll get into some fun lease stuff.
Yeah, Allied Healthcare Real Estate's a commercial real estate firm. We're based out of Colorado. We specialize in healthcare. I specifically work with dentists day in and day out. I've been in the dental field since 2008.
That's it. It's short and sweet. I love it. I think it's really important. Yeah, there's no reason to mix words. I think it's really important to have a dental professional obviously handle this situation. I sometimes get into the whole, well, I've got a buddy, or this guy has negotiated a couple dental leases before, I think he can do it. I cringe when I hear that. How would you respond to that? Because no, a real estate agent can't do this stuff.
What are the risks? Is that what you mean, Michael?
Why?
Yeah. What don't you catch if you haven't done this,
Yeah, there's a lot of nuance to dental lease. I mean, the analogy would be like, hey, my chiropractor should be able to clean my teeth, right? They're both doctors.
How dare you go there?
So, but that's the reality of it. So yeah. If you specialize in something, you're going to know the ins and outs of it all, and then what it takes to put a project together. If we're looking at a startup, there's a lot that goes on, and majority of it has to involve around the bank. So we have to understand the parameters of the bank and negotiate with the bank and get their blessing before we sign anything. A lot of commercial real estate brokers will just go out and find a space and have the doctor sign right away because that's their job. They don't understand what's on the back end with financing or do they truly care, right? They just want to move on, get their commission, and call on the next general commercial real estate requirement.
Yeah. No, I'll never forget a comment from another broker. And Dan, you know him. His name's Christian Guile, and he's out of Arizona. And we did a week of Shark Week with real estate folks. And he said that brokers have commission breath all the time.
Oh, yeah.
And I'll never forget that comment. And it's so true. Brokers can, real estate professionals, brokers, whatever you want to call them, they have a job to do and they're trying to make money. And
Right.
they work for free until they get paid. And I think it's the reality. And I think it's great that you have started this organization that thinks a little differently. And what are some of those ways? I know you do lease renewals. I know you look at leases for free as a service. Like, what are some of those things that you guys do that won't require a fee, but every doctor needs to do?
Oh, yeah. So a lease assessment, understand where you are within your market. In general, right now, the press does a pretty good job of saying that commercial market is down, right? If you hear about commercial real estate, you're thinking like, I'm going to go steal a building right now for pennies. And that's not the case, but sometimes it can be the case. It's variable, right? Like I'm in Colorado and I can get you a screaming deal downtown. I promise you, a really, really good deal on a general office space because there's vacant towers. But do you want to be downtown? And if I'm a startup doctor and I want to be on the north side where all the growth is happening, northeast, I can't get a piece of commercial real estate. It's not being built fast enough. It's at all-time market highs, and the landlords are being super picky. So it's understanding where you are within the market. I think that's first and foremost. Understanding the value of your build out and whether the landlord understands that value or not, because there is significance. I mean, we're talking about hundreds of thousands of dental infrastructure that's built into that space that's different than the next door suite. It's understanding when your renewal date is and how to leverage that. We like to talk to tenants 2 years out and put a game plan together. I mean, if they're looking to go ground up, we probably need a little bit more time, but given the cost of construction, depending on where you're at, ground up hasn't really been an option in the past couple of years. So
you guys have done a great job helping me and some of our clients, specifically in Colorado, where you'll look at acquisition leases, and before we actually ink the deal, you'll give us some comparisons. You'll take a look at a lease review. If there's room for you, you're there. But if there's no room for you, you'll sit on the sideline. And I love that about you. You've always done that, even at your previous company. And that's a huge service to the industry, to me, to dentists. I don't think people really appreciate good brokers like you guys are, and the great information you can offer without asking for a fee. And knowing your lease and really getting into it matters. And yeah, it's awesome that you guys do that. So thank you for that.
yeah.
Let's pivot. And Paula, when you owned, you might not have even remembered any of this stuff, but we're going to cover one of the topics that was really important to you when you sold your practice. And so if you remember any of this stuff when you were looking at your lease, maybe you will, maybe you won't. But I'd like to get into like some of the intricacies of the actual lease that cause people a lot of like, I don't know, anxiousness. I think everybody really thinks about the price, the escalation. It's just like I used to be a lender. They think about interest rates, the interest rate. And there's a lot of other shit that needed to be thinking about other than just rate, like payment terms and interest only periods and how much working capital. Like there's so much more than just the dang interest rate. And I think that's what happens in your world, Dan, in the lease rates. So I want to get out of the lease rate. Let's not talk about lease rates, but let's talk about the other things that you need to think about when you're looking at a lease. What are some of those things, Dan, that you would like to highlight? I didn't give you much preparation, so in typical unscripted fashion, but what do you get a lot of questions about with these leases if they actually read the lease?
Oh, yeah. It's understanding assignment language is a big one. Exclusivity is a big one. Understanding triple nets is always a gotcha. And then especially if you're a business owner and you've been in the space for more than a year, the triple nets will come up, and there's a lot of questions around that. A lot of the lease is going to be attorney based, and there's always should be an attorney on the team. I'm not an attorney. My goal is to negotiate the business points and get the business points right in the lease. And some of those teeter on legal, and should they be talked about in the letter of intent, the non-binding letter of intent, and then those ideas then inserted into the lease that will be legally reviewed. So it's depending on where you're at in your career, what you're looking for, how to separate yourself or how to protect yourself.
Yeah. Well, let's hit the big one, exclusivity and assignments, because I think, well, what the hell is it? I know what it is. You tell everybody else. What does that mean? Exclusivity, and it's two topics, but let's hit them both.
Yeah. So if you have an exclusive in the building, that means that no other, we'll say general dentist as the example, that no other general dentist can practice in that building. So you're it for the building. And a lot of doctors get caught up in that. And it's important if you're looking at a retail space. So if you're in a strip center, you're likely going to be spending more on rent than you would in a general office building. And that's because you have signage, and that signage is, free, quote unquote, free marketing. So you have to pay for that, right? That's the air quote free. So you'll get concessions like exclusivity for other general dentists that can't practice in there. And that's because, again, you're already paying for it. And if another general dentist were to move in, then there's no point in paying the additional rent to have it. So that's where it's standard. And we see that in strip centers or standalone buildings. And then we transition to a general office or a medical office building. And we'll start with general office, where there could be a CPA next door to a dental office, next to an attorney, next to a chiropractor. And those lease rates tend to be a little bit less. And you don't get as much with that, right? So there's no signage, there's no nothing there. It's just you get office space, very cheap rent, and you go. To have exclusivity there is difficult because now you're hamstringing the doctor from leasing the rest of the building. Right. So,
or the owner of the building, you're hamstring
the landlord. So the landlord's not able to lease more of the building out. So they don't want to do that. So, and if you're driving by a general office building, you don't know if a dentist is in there or not. The reality of having a dentist right next door to you and a patient walking by office A when they're going to office B and saying, "Hey, I'm going to switch my doctor," is very, very low. Right. That's an asterisk type situation. So when negotiating business points in an office space, spend your time on lease rate, spend your time on free rent, spend your time on tenant improvement allowance, things that will actually help your cash flow and help separate yourself when you need the separation versus, trying to have exclusivity. Because if a general dentist wants to be in that area, they're going to be in that area regardless if it's in your building or not. It could be a block.
And I almost think like if you switch dentists, you're probably going to want to stay away from the building. You're probably not going to want to walk by your dentist to it. You're probably going to be like, I'm just getting out of this building in general, right? I mean,
right. Absolutely right. Yeah. You're not going to go back. You don't want to be seen.
Now,
you don't want to have that awkward conversation.
Right. Exactly.
Oh,
you like slither away and especially if you owe money, you're not going back.
Yeah, right.
Dan, I've gotten into weird conversations about the exclusivity thing where a general dentist wants to do ortho or wants to do some pediatrics, and they're fighting for this exclusivity, and then it starts getting real weird where it gets very specific, like can't do children's prophies, or like it starts getting real specific. And I've heard, you correct it, you debunk this, but I've heard the more specific it is, the more it hurts you, kind of a thing. Or do you want to stay broad? Like, what's the strategy there? Because again, GPs could ask for exclusivity and then want to do clear liners, and next thing you know, you're in a lawsuit or whatever. So what's the idea there?
Yeah. So again, if your business model is general dentistry and orthodontics, and you want to advertise that on a sign, then you can negotiate for general dentistry and orthodontics in a retail center. If you're in a medical office building or office building, again, the chance that you get exclusive is very low to begin with. And if you are going for that, you have to call out what your use is. General dentistry is a little tricky, right? Because that means it encompasses all dentistry. Whereas if you're pediatric or ortho or oral surgery, you're very specific in what you do. So you can't call out like, hey, I have this broad term where I can do a whole bunch of different procedures. So that's always a catch, and I've seen it ruin relationships within the market if they're in the same building, because again, doctors have the right mindset of they're trying to protect themselves, but this general dentist was already doing child prophies to begin with, most likely, right? It's going to be a family practice, and that general dentist is going to know where their boundaries are and when to send off to a specialist. But if that general dentist was across the street, they'd still be doing the child prophies. And it's all you're doing is creating the tension with your partner in the industry for no reason, right? Both practices can be successful. If a general dentist is stealing prophies from a pediatric dentist, and the pediatric dentist is not succeeding, it's not because of that general dentist. There's other problems.
Yeah, it gets very weird. Like I feel like, you know, in the moment, a lot of our clients, a lot of your clients, they get caught up in the negotiation. And I feel like it's our job as professionals to just kind of like, hey, let's take a step back and talk about what this actually means for your business. And I think that's why they've hired us. But in the world of negotiating, it's like you start narrowing down on this clause, and they're like, well, what if I do want to get into ortho? Let's box everybody out. It's like, okay, let's just take a deep breath. But
once it becomes more real, that's usually like the deal's happening, especially if you're a startup and you haven't owned your own business before and you're about to go $750,000 in debt with a loan and, you know, risk everything, push your chips all in to do this. That's when the narrow focus on one or two, it's emotional items really come out, because it's probably not really the exclusivity. It's more along the lines of it needs to be perfect in my mind in order for me to move forward. So we have to take a step back and take a look at the economics that you're getting, look at the area, look at the demographics, look at this opportunity you're about to start your own business in. And whether you have this exclusivity clause or not, it's really not going to change how you do.
No, that's well said. Okay, let's pivot. Paula, when you sold your practice, how would have it felt? I said that weird, but how would it have felt if you were trying to sell to the doctor that you sold to and the landlord said, I don't think so? That'd be a problem if the landlord didn't let you give your lease to the next person. Would that be a problem?
Yeah, I didn't even know that was possible.
Yeah, that's what assignments are. So let's talk about assignments.
My landlord was super cool. Like, he didn't give a
dude. Your landlord was so cool. Like, half the stuff
he didn't care.
But it is a real thing.
I didn't know it was real. I remember you saying something, and I was like, "What?" Yeah, he was like, "Whatever, sure, you know."
Whatever. Yeah. So Dan, how often do you see assignments being a problem on the first draft lease, and you're reading, you're like, dude, that's not going to work? Like, how often does that come up?
About half the time, the language is pretty severe. So sometimes there's language in the assignment that if you request an assignment, the landlord can terminate your lease. So the whole
immediately terminated.
Right. So wait, so I was gonna ask you about some pitfalls of not having someone like you, and this is probably one of the biggest ones. They're gonna sign something, and
well, it's back to being it's back to being a dental specific broker. If a residential broker was looking at this lease, they wouldn't think anything of it. But Dan's sitting here thinking this doctor's going to sell at some point.
Right. The whole point of having a commercial space is to own a business, and that business is worth as much as you can sell it for or how liquid it is. And majority of the goodwill is tied up within that location. So if we don't have the goodwill, I don't know what we're selling for. It's going to be a chart sale. So now we're talking about pennies on the dollar versus, overproduction. So
okay,
it's.
I just learned something.
Sorry?
I just learned something.
Yeah. So
Michael handles all this. I stay in my clinical world, but wow.
So 50% of the time, there'll be an aggressive assignment clause that favors the landlord.
Yes. Yeah. Not that aggressive. That's more outlier type situation determination, but we see that. We'll call it 5% of the time. Majority of the assignment is just saying landlord's pure discretion, whether you can do it or not. And what we're looking for is we're looking for the levers to have the assignment happen. So a lot of times we're explaining to the landlord why this needs to happen, right? Because one day we will be able to sell the practice, or we'll need to sell the practice, so we have to have the opportunity to. So there's the assignment of just moving the practice into someone else's name. And then there's the bigger issue that most people get tripped up on is the financial guarantor piece, whether we can get off the lease or we have to stay on. The tricky part is when you sell a practice in your midterm. So say you have 5 years remaining and you have a 5-year option. So we have 10 years on paper, that practice is financeable. We hope that it's assignable, right? We can go from Dr. A to Dr. B, but does Dr. A have to stay on the lease after the sale? And 50% of the time, I'd say yes. So, and it's
I want to ask you one question on that, Dan. Is there ever an assignment of where it's specific that it has to be another dentist, like not
a like business? Yeah.
Okay.
Yeah, and
like that, is that usually a requirement? Okay.
Mm-hmm. And I want to bring this full circle because this idea of assignment so important. Let's back up. The landlords aren't jerks. I mean, some of them can be total jerks, but the landlords aren't jerks. They have a deal with Paula. Paula owns the practice. Paula's been paying her rent for years. They trust Paula. Now, all of a sudden, because Paula wants to sell to Dan, they don't know Dan, but they have an agreement with Paula. So the landlord's sitting back saying, well, I signed a 10-year deal with Paula. I don't necessarily want to deal with Dan unless Dan is a good dude. And that's where the landlords are coming from.
But wait, but a contract is a contract. And even if if Dan signs a contract, he's in it. He can't not pay. If he doesn't pay, he can be sued.
Right. So, but yeah.
So professional. Sorry, Dan, we're taking over.
In the example that I'm buying your practice, Paula, if you're retiring, you probably have a net worth of a couple $1 million. I'm a brand new dental student. I've been practicing at a corporate office for 2 years. I have a negative net worth. That doesn't give the landlord financial fuzzies, warm fuzzies, security that I'm coming in. So it's like, wait, I want the security of Paula because she's worth this. If something happens, she can pay for the lease. Because at the end of the day, all I care about is for this payment to come in on the space. Dan's coming in, he's not worth anything. I'm nervous. I got no teeth here. What do I do? So that's yes. So so that's the nuance of the negotiation at that point, right? Is how can we bridge the gap? Is it additional security deposit? Is it, Paula, you have to stay on for 12 months and then burn off? Is it that you have to stay on the entire time for this 5 years and then Dan will take over the option in year 6? So all that's going through the landlord's head because all they care about is the money coming in and how can they secure it. So it's a lot of education with landlords about that. And it's always very touchy because it's such an emotional process to sell your business. Like it's your child. And you think that you're done, but all of a sudden you have this lease looming over you, right? Like it's
one of the last things that gets addressed, which it almost should be one of the first things, but just by the way the cadence works and what you
got to make sure you like the practice first, or it's like
there's so much stuff to figure out.
But I see what you're saying, yeah, because you get here and now, like Dan's talking, there's this thing.
There's this other thing. And so like what we're talking about is I don't want to get into acquisition stuff because that's exactly what we're doing right now is kind of discussing acquisition stuff. But like when you sign a lease as a startup or you're relocating and building your brand new beautiful office, you're an established doctor or startup. Someday you're going to want to transition it to someone. Even if you're in distress and you can't make your bills, you're going to. I had a doc in Colorado, actually. She found out she was sick really quickly after she opened her doors. she was stuck, and we had to get her out of the situation, and she had 0 sales. But she had to do that, and having guys like Dan, hell, Dan probably was the one that negotiated. But I think assignment's so important. It's something to check the box. It's a very, again, rates are one thing, exclusivity is another thing. Like these little things really need to be touched. We're 25 minutes into the show. I don't mean to keep going, but I really want to cover something that you said, and that was, again, it's not just interest rate and escalation, but there's other expenses. And I have a hard time explaining it because it comes down to, hey, look, we're renting this building from somebody or this space from somebody, but now I got to pay all their bills too, and they own the building. Like, how's that work? And it's such
I had a problem with that.
Yeah, of course, everybody does.
And
it's
then
like,
what's
well,
covered? And what is this?
Yeah, what's covered?
The roof, the HVAC, like what is this?
And I think it comes down to like, well, if I'm paying you money, why aren't you taking that money and paying your bills? But that's just not how the lease world works. So the question, you said it, Dan, what's triple net? Dan, what's triple net, and how do you explain this ridiculous
and why are we responsible?
Yeah. So this is a long one. So triple nets are 3 pass-throughs essentially to the tenant, and you pay your pro rata share of each of these pass-throughs. So the first pass-through is property taxes. So if you're in a building where it's 10,000 square feet, you occupy 2,000 square feet, you're paying 20% of the property taxes for that building. The next is property insurance, which is usually pretty small, but the insurance world has gone upside down in the past couple of years, and we're seeing increases of insurance 100, 250%. So it's a nominal fee right now, but it's growing. So that prorated share is passed through. So property taxes on the building, and then property insurance on the building. Those are the two. The next one is the enigma of CAMs.
So CAM is the third end?
Right.
Well, why do people, okay, let's go to that, but some people pull that out for some reason.
It's just how it's billed or what they see, how it's written, but it's common area maintenance. It's what it is. And it's what's it cost to run the building, landscaping, snow removal. It could be if there's common area restrooms, it could be supplies for the restrooms, it could be water for those restrooms, utilities for those restrooms. Depending on the type of property it is or how the lease is written, it could be roof, it could be HVAC, it could be property management fees, it could be property management assessment, it could be
snow. Could it be snow removal?
You said that.
Oh, you did?
Yeah.
Okay.
It could be restriping the parking lot.
Not in Arizona, no snow here.
It's wild what it can all encompass, and each landlord's got it written differently. So depending on how the lease is written, and you want to just watch out for the catch-all, that everything is passed through. And you want to understand the breakdown of that triple net prior to signing the lease. Like, what is the landlord passing through? What's been the historicals the past couple of years? What percent has it increased? Because what a triple net is it's an estimated expense based upon historical years. So we'll say that a space is leasing for $30. That's how it's advertised, plus triple net. So you see $30 and you think that's a good deal. Then you come find out that the triple nets are really $12 a square foot. So now we're looking at a lease rate of $42 gross. And that's a marketing scheme. That's done like that on purpose to attract potential tenants to the building. You're like, ooh, 30 is good. I like that. Then you find out the total gross. You're like, oh, that's why it's advertised like that. This makes more sense. So that $12 is an estimate based upon either projections or historicals. If it's a brand new building, you're projecting. If it's historicals, then you have data at least, and hopefully you're within earshot. But what happens is January, go ahead.
Sorry, I didn't mean to cut you off there. I wanted you to finish, but like, I guess I'm thinking so you said it, and I just want you to say it again. The landlord does give you a breakdown of what that looks like before you sign it. That happens if you ask.
Yeah, you can ask. They should be able to give you some of the buckets to see what it all incorporates. I mean, you could be opening Pandora's box, because then tenants think that they can control some of those expenses, which we'll get to, but in reality, you can't, right? That's the landlord's in it to make a profit off their building. They're getting paid base rent. That's the marketed rate. And then those pass-throughs are your expenses.
So I'm a landlord for a home, and what I'm hearing is I should buy a building because everything can be passed through the tenant.
Right. I mean, depending,
Where I'm still responsible for everything that happens to the house. I like
Right.
the building idea better.
Right.
Wow.
Yeah, I guess I'm thinking here that, like, folks, I want you guys to think about this. So you want to look at this because let's say Paula owns the building, because she just came up with a new
About to
business
buy
plan
one.
tonight.
Yeah.
So Paula owns the building and I'm her business partner, which is a true story. Okay, so I own a snow removal company. And I have a contract with Paula, who happens to be my business partner, and I jack up her rates on snow removal, and I cut her in on that profit of snow removal. So the triple net expenses can be, I've seen weird stuff before, like that scenario where expenses aren't like they're not very solid. So do you guys do you look at that, Dan? How does
Like
that
competitive, like it's like why is there snow removal $1,000 a month? And it goes all the way into June.
So it's so for our clients, we'll take a look at year over year, because the way the triple nets work it's an estimate. So we'll say the $12 a square foot. Landlord said, hey, $12 for 2025. In 2026, all of a sudden come February, January, they get a bill for $6,000 of assessments. And that's because the landlord reconciled their books of what the actual expenses were for 2025. And if they were short, tenant needs to pay up.
Paula, we just got an email from Dr. Rock in Arizona, and he was pissed that he got that $500-$600 bill, and it was because the landlord underpaid his triple nets, and so he had to pay the difference because they misestimated it on the front end.
Yeah, so it's all it is an estimate.
But what about whoever was in the building before? Why weren't they responsible? Why don't
they would have got prorated? They would have got prorated.
If you leave middle, yeah. So Dr. Rock, for example, if he was in the building February through December, he would have paid February through December assessments. He wouldn't have paid for January. But that's how that works. So that estimate is just an estimate, and then at the beginning of the year, they'll reconcile their books. If they estimated, they'll get a credit on their account. If they underestimated, the tenant has to pay.
But you're looking, if you happen to get in a building that was already there, you look at historicals, you help the
So it's like there's no way we can.
Did you reconcile your books? Do we ask them that?
So they reconcile their books every year. It's just whether or not they're cooked or not, those books. So it's if they have the buddy that is a snow removal specialist that charges 500% of what market is.
We're doing that.
Like we don't own snow removal companies. We don't know how much snow removal should cost or shouldn't cost. So you're trying to take the landlord at their word. However, so there's multiple things here with that though, because if you're the landlord, you want to have triple nets as low as possible. Because if you have vacancy, you're paying those costs. And if your expenses are through the roof, your tenants are pissed. That's not a good way to keep your tenants. So a smart landlord will not cook the books. They'll keep running their business at a low cost to keep everyone happy. And when taxes come in, which taxes are the lump majority sum of the triple nets, at least in Colorado.
The first N that you said
is property taxes. And then as soon as they get their assessment, and if it's gone up, they should be contesting that assessment. But yeah, it's tricky and it's frustrating every single year because every year you're going to get that bill. So it's almost
okay. Let's talk. I love that. I mean, this has been a fantastic conversation already. I can just send this podcast to every startup that starts asking these questions. Be like, hey, just watch this. I'll save me a coaching call, and it'll be better than the way I could say it. But I know enough to be dangerous. Dan, help me out in talking about the big things, because I think the big things need to be discussed. And I'm thinking HVAC replacement, I'm thinking roofs. How do you protect our leasees on, oh shit, I just signed a lease and the HVAC is
Remember, we
gone.
had that happen here in AZ. We had that happen.
Yeah, now we're talking about Arizona stuff, not snowplow, or let's go the other way. HVAC.
No, they're all the air conditioning going out.
Yeah, because I've seen it. Don't you guys negotiate that out or something like that?
No, it depends on the property. So if you're in a medical office building, typically the HVAC is going to be on the landlord. It's going to be landlord's expense. General office building, they could do an assessment and charge back to the client for some of those costs, hopefully not a lump sum. It's just, and then in a retail space, the HVAC and the roof are typically on the tenant.
On the tenant.
So it's trying to negotiate where you're not getting billed for that capital improvement all at once. You're getting billed over the lifespan of that HVAC unit. So instead of, $30,000 bill, that's now spread out over 20 years. That's just part of the cost. So
that makes sense.
Even though the HVAC may never go out, you're just paying
your pro rata of the life of that asset. So you gotta hire crane operators to put these HVACs up on the roof. We saw one the other day, Paula, and that's expensive. And so to replace an HVAC system on the 20th floor of whatever building is really expensive. Not to mention the other HVACs might be okay, but they could go out at any point. So now we have the crane operator there and paid for, so we might as well just do all of them. And then imagine all those leases paying all of that one lump sum, boom. And then, the HVAC's good for maybe another 50 years, but those poor leasees in that moment had to pay for all of that. So if Dan's on the job, he's going to try to spread that cost over maybe 20 years or something. So that's something that you negotiate, Dan, or no?
Yeah, no, that's an item that we're look for gotchas, right? Like we're trying to stay away from gotchas. If we're a startup, cash flow is king for us, right? We have to minimize all of our costs as possible. So if a big gotcha pops up, then that could be really bad for us. So It's how do we minimize that risk? Like, can we first start by saying, hey, landlord, HVAC's 100% on you, and then in the negotiations and go back and forth, and then end up at, well, if a large capital improvement goes out or is needed, then we can spread that over the lifespan of that unit. And it's not fun because you're still paying that bill, but you're not paying that bill in a lump sum.
Yeah, so in the residential world, it's kind of called a special assessment of some sort, right? Like a big thing that needs to be,
right?
Like your HOA, you get the HOA dues, but then like an elevator goes out of your complex. That's like a special assessment. Maybe some of you have heard that before, but same thing in the commercial world. Yeah, I mean, like, needless to say, like, there's a lot to a lease that you got to look at other than just simple base rents. But what I heard there was that base rent is the actual profit for the landlord. And then their expenses are kind of covered in CAM, AKA triple net, lumped in. So you're paying all the expenses and overhead of the landlord's building, including all of the improvements. And then the base rent is pure profit. That's what I heard.
Yeah, assuming that it's paid off, right? The most, probably majority or overwhelming landlords are in debt for their building. So that's paying for the cover of their debt. And then anything remaining after that would be profit.
Love it. Paul, any questions about that? I mean, I know you're, yeah.
No,
Dan,
I learned a lot. I mean,
I'm hoping that people don't associate this negativeness with me. So when they see me, they're like, "Oh, you're the triple net guy."
No, I think
you're the guy that protects them from making a costly mistake when it comes to signing a lease with triple net.
Yeah.
I guess I found that over the years, the more people are educated about what they're doing, the faster they're running towards the deal. If you're in a situation where you feel like your broker isn't going through all this stuff, maybe you need to give Dan a call. Not that Dan wants to get in the middle of a relationship you already have, but you got to look at this stuff. It's important. You got to know your lease. You got to know what options you have and don't have. And to Dan's point in the very beginning of this conversation, sometimes not all the deal points are important to you. So don't die on the hill over something that's not really important. And maybe that gives Dan the ability to press on something that is important. That's called a negotiation. I think that's really important to understand the differences. So, Dan, any last kind of minute, last kind of thoughts about complexities of lease? I mean, we covered a lot of really good stuff here, but anything else you want to say that kind of closes this topic up?
Yeah. So all of those conversations are the business end up front, and then all those get inserted into a lease. And then you got to go through it again, but from a legalese perspective, which is, a completely different lens. So it's a thorough process. You shouldn't get a lease and sign it within a week. In likelihood, it's going to take, 4 to 6 weeks to get through that lease properly and go back and forth with the landlord.
Would you say from the moment Dan Gleissner sends an LOI to the moment it goes through your process, then legal, like you just said, what's the average time frame for that?
Yeah, 2 to 4 months.
That's what I thought. Yeah, 2 to 4 months. 4 months would be long, but for sure, yeah, it could take that long. Okay, very cool. Thank you so much for your brain, your acumen, your service to the industry. It's been really good. We will be putting Dan's information down below, and if you're seeing this on YouTube or any of the podcasts, we'll put in the description links to get a hold of Dan. Like I said, it costs nothing to have Dan look at your lease, like literally nothing. So have a professional like Dan look at that lease just to spell out everything that you're dealing with, so that you know your lease really well and what options you have, and make the right decision. I will say, for those of you that own practices, or folks that thinking about making a change, one of the biggest things is look at your lease at least 2 years before it expires. And Dan, I know you'd say the same, because what is Dan going to do with a lease that expires in 3 months? He's got no leverage with the landlord. But if you approach Dan to review your lease 2 years before it expires, he can do a lot with that time. A lot of people go to you, Dan, I'm sure, last minute, and you're like, what? You're screwed, buddy. So
yeah, we have to find a turnkey option in order to create leverage. But yeah, we want to be on the offense versus the defense, and we want to assert our game plan and maximize that through proper timing.
Yeah, I love it. Well, again, thanks so much, Dan. Folks, please like, subscribe, do all the things. But Dan's information will be there. Paula, I think we've got a new business strategy at Next Level, so let's go buy some buildings. Dan, you will represent us on that building.
Perfect.
Without further ado, let's shut the program down. But thanks so much, guys, for your time today.
All right.
Great. Thank you.
See you guys.
See you.
Thanks for listening. Let us know how you like the show. Rate us on Apple and Spotify. Subscribe and follow for more.